All right, I hope you're having a good weekend. Just wanted to make a quick video lesson on this stock because I think there are several good lessons with it. I'm getting a lot of emails asking about my new Wolf Millionaire website, wolfmillionaire.com. We're going to teach you everything we know about Instagram. And when I say we, I mean me and my partner, Anthony. He has over 11 million followers. I just have close to 500,000 followers, but he has over 11 million. So he knows more than I do, but we're also both very successful and profitable on Instagram, and I think that's a very easy way to make money. There's no risk of loss, unlike the stock market. You can't lose money setting up an Instagram account or trying to grow your existing Instagram account. So I'm excited for that. I'm working on the guides right now. We have several guides that we're releasing in a few days. If you go to wolfmillionaire.com, you can enter your email. You get a free initial guide, which will teach you the basics of Instagram. I think every single person should be on this website, this social network. It is the fastest growing social network in the world. If you look at the data, people use it and love it much more than Twitter, Facebook, LinkedIn, anything else. But aside from that, let me get to this stock. So here are 5 lessons on SYPR. SYPR was a big percent winner. It was up nearly 70% on the day on Friday. If you look at the long-term chart, it's not really used to spiking that much, but it can, and it has. It does have a history of spiking and running, which is better than, it just going straight down. This is a very ugly long-term chart, though, so I did not really even expect to buy it or trade it. I know some people shorted it, and that's cool. When it's up here in the 260s and it's up over 100%. I'm not one to short contract winners, but I know that there is money to be made. And as you can see from the nice drop. But for me, I bought it right in here on the dip at 185-ish. And after hours, it's at like 189, 190, 192. So I'm up a few cents a share. But why am I long? So number one, low risk of financing over the weekend. A lot of shorts were saying, oh, this company has very little money. They might need to raise money. And that way, the stock is going to drop. That works for the majority of stocks that go up 50, 60, 100, 200% in a day, a lot of these biotechs. But this is not that company. All you have to do is, again, go to Yahoo Finance, which is what I use for most of my research. Type in the ticker, and if this works, you will see that they just did a refinancing on November 2nd, an extension of its credits facilities. So they have, $27 million in the bank, basically, that they can, not in the bank, but it's a loan, but they don't need to raise money right now. So a lot of longs basically, or a lot of shorts just lied about that. Obviously they could always do another financing, but this was just 2 weeks ago. So I think there's low risk of more financing. Also, some shorts were saying, they're reporting earnings. Tim Sykes doesn't want you in ahead of earnings. Correct. I don't want to be in on earnings, but they're not reporting earnings on Monday. They're reporting earnings on Tuesday, and you can clearly see that right here in a press release. They will be reporting results on Tuesday, November 17th at 9 a.m. So before the market opens on the 17th, not the 16th. It really pisses me off when, people are tweeting this and saying this in different chat rooms, and they're just lying, and all you have to do is do a little research based on the recent press releases and see that they're lying. I hate misinformation. I really hate it. Number 3, this is very important. So it spiked initially on the news when they announced, I guess I should go over the news. The news was that they signed a long-term deal with Volvo. And a few days ago, they signed a deal with Detroit Diesel also. But this is a new longer-term contract with Volvo. So that's the news. That's cool. But you see, this is very good. It spiked initially and then tried breaking out again 2 hours later. So this was the initial spike, and it went all the way up to 260 and then down to 2 and then back to 270 and then back to 2. And it kind of cracked this intraday support here at 2. And I think that's just before, right into the market close. The whole market is dropping. Obviously, this is kind of like a double top, so this isn't exactly a good pattern to buy. And I think a lot of dip buyers, were trying to buy it here at 2, thinking it would go to 220 or 240, and they got slammed, and then they had to cut losses. But that opens up opportunity when, a dip fails. Sure, I wouldn't be buying this at 2, but at 175, 180-ish, 185, there's less risk, especially heading into the close. This also, a similar PR from a few days ago confused people. So if you go to the press release, right here on Friday, November 13th, they say Cypress awarded long-term contract with Volvo. And then on November 4th, it says Cypress awarded long-term contract with Detroit Diesel. So a lot of people just read long-term contract. They didn't even read the rest of the press release. And I saw people saying it's the exact same press release, so it shouldn't be up at all. And that's not true. If you read the press release, this is cool. Detroit Diesel is a subsidiary of Daimler Trucks, which is pretty big, and I guess they're selling their lightweight axle shift for Detroit. Whatever, that's cool. We got to read a little more into this. Blah blah blah. We are pleased to expand and extend our strategic relationship. So they already had a relationship, so maybe they expanded it. That's cool. But if you read the press release with Volvo, this is much more important because they say they were awarded a long-term contract. That's cool. We're pleased to continue to supply these components, but now directly to Volvo as a Tier 1 supplier. So before, they were a Tier 2. You see, look at this. Cypress has been providing axle shifts for over a decade as a Tier 2 supplier. We're pleased to continue the supply now directly as a Tier 1 supplier. We're excited for the opportunity to expand and extend our relationship. So they moved up from Tier 2 to Tier 1. So a lot of people are asking me, what does that mean? Well, I know the answer, but I wanted to show you the website. This is on ask.com. Tier supply chain model is prevalent in the automotive industry. Blah, blah, blah. Tier 1 suppliers provide components directly to the OEM, meeting the required specifications. Tier 2 provide their goods to Tier 1 suppliers, not directly, and Tier 3 are directed to Tier 2. So lower tiers provide decreasingly finished sub-assembly parts. So suppliers covet Tier 1 status because it conveys the credibility and commitment required, trusted to design, develop, and validate the products. So if you go back and read this press release with Volvo, they say that they are going to collaborate on other products where we can bring value to their supply chain. So now that they are a Tier 1, instead of just a Tier 2 supplier, now theoretically they are more trusted and they're delivering specifically to Volvo. So this is kind of a big deal. I'm not saying that this is an amazing company or that it's going to spike or whatever. I'm saying that it is a meaningful deal. And this is the most important part. Market cap, volume. Buying on a huge dip near long-term support all lead to solid risk reward for me in at 185. So, I would not chase this stock. This is automotive. This is not like a sexy industry. This is not like a totally brand new contract. I'm aware of the negatives, but I think I've also pointed out and cut through a lot of the BS that I saw being posted by short sellers trying to create panic, which they did. So thank you, short sellers, for lying. Some of you guys just shorted it and you banked, but some short sellers lied and created this kind of confusion, which I just cut through. But I'm buying this stock roughly $1 a share off its highs. It hit 270. What was that day high? 275, 274-ish. So I'm buying it 90 cents a share off of its highs, roughly 2 hours later. So maybe people got a little too excited about this. You have a breakout, whatever. But what is the risk here, me buying it? That's where you have to turn to the longer term chart. And the longer term chart here, tons of support here at 170-ish. If you go back 2 years, there seems to be some resistance right in here at 180-ish. So 170 and 180-ish, I'm just looking at the previous highs, and right here it got to like 190-ish. So 170, 180, and 190 is like a kind of a congestion zone where this company was once upon a time valued in this, and tons of support here in the 160s. So at worst, I'm going to risk losing 20 cents a share, which is, a lot for an under $2 stock. But I have a feeling that, if it did drop below here, the lows, which were 178, 177, I would cut losses. So my real risk is losing like 7 or 8 cents a share. And it bounced a little into the close and it's up a little after hours. I think it can get back to 2 and maybe even the low 2s. So call it 220, I think might be the high. So I think that there's 40 cents of upside and call it 7 or 8 cents of downside. So my risk reward is roughly 5 or 6 to 1. So that means 40 cents of upside, do the math here, and 7 cents of downside for me from my entry price. That is how you have to kind of judge every trade. I want there to be significant risk reward. I don't want to risk financings that much. I mean, financings can happen anytime. I'm not risking earnings. I'm not saying hold this through earnings. And, because of the Paris attacks, the markets are probably going to open down a little bit on Monday. So, we might not get any bounce. I could be completely wrong on this. But I'm protected because I've bought at a very specific point and I've done my due diligence before I risk my hard-earned money. A lot of people just listen to people in chat rooms and on Twitter and stuff like that, and they don't do all of this research. And, this is where I get really angry because I'm just reviewing the chat archives from everybody. And there are people out there that specifically lie about this. And it's my job to cut through the BS. So this is why I'm long SYPR, not expecting any huge fireworks. I will not be holding through earnings on Tuesday, but I think that I have a very low risk dip buy, and that's all you can try and do. When you take trades, you go in with a thesis, you go in with a plan, you have your risk reward set, and you see how it does. If I make money on this, cool. If not, it's okay. Very similar trade was on RITT a few weeks ago where it wasn't a contract winner, it was actually an earnings winner, but it was on this day, the stock had already spiked to the 2s and it had come down and I was buying it at the 150s. And then I got, called a pumper for buying a stock on a 50 cent a share dip. And yet over the next 3 to 4 days, it went back to 2, came down, never went below my entry price of 152, which was interesting. So if I am a pumper, I'm a very successful pumper because it specifically never broke that level where I bought it, and then it actually went back to 2 again. So for me, I like dip buying earnings winners. I like dip buying contract winners when there is the right press release, the right market cap. These are both small companies, which means that they can fly, spike very easily. I'm buying them significantly off their highs, so there's not much risk because theoretically there should be support right around where I'm buying. And I'm willing to admit that I could be wrong. I could be wrong on any single trade, and that differentiates me from bullshit artists and pumpers where, I think my philosophy training kind of comes into play where it's okay to be wrong. I don't need it for my ego. I don't need it for my bank account. All I'm trying to do is pick good setups where the upside is greater than the downside. And, on RITT, I was buying it in the 150s and I was selling it in the 160s and 170s the next day. And I underestimated it, and it went all the way back to 2, weeks later. But this is the sign of something good. A lot of people say, oh, just judge the trade based on when you're in it. And that's not true. That's not what I've learned over 16 years. If the stock keeps spiking the way that I originally planned, that's validation for my thesis because it meant that I was on the right track. And I know I exit a lot of trades too quickly because I trade so safe. But if and when the stock, spikes, that's incredible for the next few days. Lake, I bought it on this, where was this earnings win? I guess it was right here, in the mid 12 or the low 12s, and I sold it in the high 12s. And then 2 days later, it goes to 15. And I was labeled as a pumper here in the 12s. It had already spiked. I love it when stocks already spike on earnings or contract wins because that shows me that, the news is meaningful. And I'm just trying to piggyback that spike, trying to dip buy it, and then trying to sell it in any follow-up spikes. And again, on LAKE, it went a little below my entry price. I didn't have that great of an entry price. If you go back and look at my video lesson on this one, I did not trade this one very well. But when it keeps spiking, I'm validated because I was on the right track to buy it. I'm not pumping. There's a difference. So shame on all of these people who lie and just put out misinformation. All I want to do is try and teach low risk, good setups. So I will always look to dip buy earnings winners and contract winners that have already spiked huge and have come down, and I'm trying to buy for the bounce. That's low risk. So I am long SYPR, and we will see what it does. I hope you guys have a great rest of the weekend. I am going to get back to wolfmillionaire.com right now, and really excited. We actually just passed 10,000 followers on Wolf Millionaire today. And this is my partner, Anthony, who has over 11 million followers, and myself. I have nearly 500,000 followers. And aside from stock trading, I really think that, Instagram, making money on it, I think it's going to be fantastic. It's no risk. Forget about low risk setups. This is a no risk setup. So I'm going to be working on that the next day or two, but I'll still be looking for trades. So I'll see you guys in the chat room tomorrow. Thank you.